Hi everyone, my name is Allie Edwards. I'm going to be doing the tutorial this week for the homework section on the week 4 access quiz or the quiz access assignment, whatever it's called. We're going to be covering questions 11 to 13. What these questions highlight is basically taking the trial balance and putting it into creating a financial statement from that. So we're going to cover 3 financial statements as listed in questions 11 to 13, and hopefully that's helpful. Also, excuse the hotel room. My husband and I are moving into our new house on Tuesday, so we're kind of in between things right now. So this is the situation. I'm just going to be using a screen share to highlight kind of between the reading and between the actual McGraw-Hill quiz. I think that's probably the easiest way to do that. So here we go. All right, so something important to recognize here, obviously we are in the McGraw-Hill, I guess, application, like desktop website, right, where we do our quiz access things. We're right here on question 11. So this first thing that we're going to be looking at is we're going to be looking at an income statement. All right, they give us the information up here. We're going to be creating an income statement from that. You'll notice that they already have the date. Oh, actually, I added that, sorry, but we're going to be doing the month ended December 31st. I've already gone through this and kind of done it again. So cleared it all. We're going to be doing this together. Something to keep in mind here. I'm just going to try and move this so I have access to my stuff. Okay. So we are going to be looking at basically this idea. So you'll remember here we're preparing an income statement. Income statement is going to be dealing with our revenues and our expenses, right? And down here at the bottom, so actually let's just start filling that in. We know we're going to be dealing with our revenues and our expenses, right? And down here at the bottom, we know that our goal is to try and find net income. All right, that's what our income statement is going to be telling us. Over here in the reading module, you'll notice this is, actually, I'll show you really quick, handy little reference right here. It pops up and tells you this is a difficult question, but it also tells you chapter 2, part 1 is where this is being sourced from. So over here in our reading, we have our chapter 2, part 1 section, and that's where we're able to use this material to make sure that what we're doing is right. So we're going to be doing our income statement, right? We notice our revenues are here at the top, expenses in the middle, net income on the bottom, just like how we have it set up over here, okay? So we added in our revenues, we added in our expenses, we added in our net income down at the bottom. Here we will notice that this is our list of what we can pull from, right? So right here, we're going to notice that we have consulting revenue and then we have expenses. So we only have that one line of revenue throughout all of these different accounts. So we know that's the only thing that we're going to be adding in here under our revenue section of our income statement, okay? And then our revenue is listed, our consulting revenue is listed at $27,080, and that's going to go in there. And you notice that total revenues pops up automatically. Now we're going to do the expenses. So our expenses, we're going to start here with rent expense. And that's right there. Now our rent expense is right here marked at $9,640, right? So $9,640. Salaries expense right there is listed at, right, falling right here, $5,680. $5,680, okay? Now we have our telephone expense listed right underneath and our miscellaneous expense. Those are the two that are left, right? I'm sorry, I guess it's just wanting to be telephone and miscellaneous. Those are both going to get added under here as well. So we have our telephone expense, which is listed at $970. And then we have our miscellaneous expenses, which are listed also at $590. Okay, so now as we scroll down here, you'll notice that our total expenses have automatically totaled and our total revenues have done the same thing. So here's what we need to do now. We need to find our revenues minus our expenses to get our net income, right? That's our formula, revenues minus expenses. We're gonna go, I'm just gonna pull up, see if I have a calculator application in here. I do not. I like this online calculator if you need something. But we are going to just pull this really quick. And we're going to subtract our $27,080, which is our revenues, right? Revenues minus our expenses, which is $16,880. That gives us a net income of $10,200. Okay. And we are done. Revenues, expenses, net income. Let's go up over here and we'll say, check my work. And we see that we have done that correctly. Okay. Moving on to number 12. Actually, something that's important to recognize here. In our reading module, it tells us that we are going to use our income statement net income to then come down into our retained earnings. And then from our retained earnings, we're going to be using that in our balance sheet. So important to remember that number right here, because we're going to be pulling it down into our next statement. So $10,200 is going to be our net income. Okay, so now we have our statement of retained earnings. That date is automatically in there. And you'll notice up here in this little hint, it says the retained earnings account balance at December 1st was $0. Okay, so there's our $0. Net income for December is $10,200. Okay, if we're confused about the order, again, we can reference this here and we see net income always goes at the top and you're just going to subtract dividends to get our retained earnings. Super simple, just those three things. Retained earnings starting, right, which is 0 in this case. Net income is going to be positive, right, because that's a good thing for our business. Positive net income less dividends, because we're going to subtract those dividends from our net income to then get our total retained earnings for the end of December. Okay, so we're going to start here with our net income. From our net income, we know is, they listed it here for us, which is really nice of them, $10,200. Okay, so $10,200. And then we know that here we are going to be subtracting our dividends. Our dividends are listed here at $6,080. And this down here is going to be our retained earnings as of December 31st. Check our work. Now, this is one of the questions that I had. It says the answer isn't complete, even though we use the revenues and expenses. So if you know why that's the case, please let me know. I'm going to be asking the professor as well. I had do this a few times last week in my quiz, but I still got 100%. So I'm not exactly sure what it means. Anyway, I'll check into that. But this matches our reading here for our statement of retained earnings. And we're not missing out on anything from here. We have our dividends, and we have our net income, and we have our retained earnings. Okay, on to the next one. Last question, number 13. So now we're going to be doing a balance sheet. Okay, balance sheet is actually my personal favorite because we get to remember that the balance sheet equals the accounting, the simple accounting equation, right? Not your expanded accounting, I guess your expanded accounting equation, if you want to think about it like that, but your basic accounting equation, which is assets equals liabilities plus equity. Okay, so we know that that's what's going to be covered here. We know that the balance sheet is as of a date, right? If you want to double check that, here we go. As of December 31st, 2020. That's your date, okay? We remember that there's 3 sections on the balance sheet: assets, liabilities, equity, okay? Our assets are always going to be on our left side of our balance sheet, with our liabilities on the top of the right side and our equity on the right side as well. So we have our assets, our total assets is going to be down here. And that is going to be equal to our total liabilities and equity. Okay. This number here, that 0 down at the bottom, has to equal that 0. Both sides of our balance sheet have to be equal. That's why it's called the balance sheet. So we're going to have our cash. I guess first thing to recognize here, we need to identify which of our accounts fall under assets. Okay, so here we're going to have our cash account. That's an asset. 25,430 is going to be our number. 25,430. Okay. After the cash, we're going to have accounts receivable. not accounts payable. Accounts payable is a liability, right? So we don't want to put accounts payable into our assets. It's accounts receivable as an asset that we need, right? So that's there at 25,450 or 22,450, excuse me, 22,450. Our office supplies come next. It's be tricky for me. Okay, so that's our office supplies. We're just going down this list and identifying this list here on the left side. We're going down this list and identifying, okay, which ones of these are assets. They've kind of lined them up pretty good with us too. That's a little hint for you. But our office supplies, there we go, 5,340. Okay, $5,340. Our office equipment is its own account. They're both listed here, so we have to make sure we include both of them in our balance sheet. Our office equipment is listed at $20,100. Okay. Next is our land. And our land is listed at $44,080. Okay. So down here we have our total assets listed at $117,400. Okay, that's our total assets. We do not have any other asset accounts under here, right? Accounts payable, we'll double check. Accounts payable is a liability. Common stock, that's going to go with equity. Dividends, nope, 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 right? All of these, then we've got our revenues and expenses. Those things are not assets. They do not go on this side of the balance sheet. Okay, so now we have our liabilities. Our liabilities are going to include that accounts payable that was trying to trick us, right? So we've got $10,480 there for our accounts payable. And that's going to go right here in our liabilities section. We have no other liabilities that we need to list here. Our equity is going to include that common stock that's listed right here at $102,800. And it is also going to include, this is where I was tripped up actually. It doesn't include our dividends, right? So if we want to double check that, personally, I was like, oh, it includes our dividends. It does not include our dividends. Okay, so balance sheet, you'll notice here on our nice handy dandy little picture from the textbook, we have our assets listed here, liabilities, and our equity. Our equity for the balance sheet is going to include common stock and retained earnings, and that's going to equal our total equity. So here we are going to have our common stock that we listed in there, and we have to remember what was our retained earnings. Oh, our retained earnings we got from our retained earnings statement in the last question, right? So our retained earnings here is $4,120. That's important to carry that over. So that here is going to now fall under our equity account as retained earnings as $4,180. Let me make sure that I got that right. Oh, 4,120. Good thing I double checked. Perfect. And that's going to equal our total equity here. I want to show you something really quick, just that helps me when I'm looking at the balance sheet. You can know beforehand if you're missing something. Let's say that I was forgetting retained earnings. Our assets down here does not equal our total equity and liabilities over here. Okay, this should be our total liabilities and equity, right? So our total assets over here currently does not equal our total liabilities and equity. That tells you right off that there's an issue that we need to fix. So we remember, oh, retained earnings has to be added in here. That retained earnings of 4,120 makes our total liabilities and equity match our total assets. And we'll go up here, check my work. And we've got it complete and correct. Those were the questions for 11 to 13. Hopefully those were helpful. Thanks.